Digital Swordsman here. It's July 19th, 2022. This is the second video of today. In this video, I'll discuss a bit about my investing strategy, which I've outlined before, but I get asked about it now and then, especially from people who are new into this sector or want to play this sector and not wanting to just buy an ETF, GDX, GDXJ, uh, but are having a hard time figuring out what to buy. I mean, this is pretty much a jungle most of the time. And it's very hard when you're new into this sector. I remember when I got into it, basically had no experience at all, had nobody to, have as a mentor or anything like that. I didn't even know a single person who invested in mining stocks. So I started from scratch, and my learning curve was I tried to read up as much as I possibly could. Looked at interviews by Brent Cook, for example, where I think he has a lot of good tips, etc. And in the beginning, I followed stuff like Future Money Trends, who are like, I don't even know if they're around really today, but that's like the biggest pumpers there is. When you subscribe to them, you get pitched stocks now and then, and basically every time they are promising like 1,000% returns. Never, or let's say, once in a generational opportunity in every single stock, pretty much. And it didn't take too long, thankfully, to realize, well, I didn't agree with their due diligence at all. I thought they, pumped some stuff that was very overvalued. So it fortunately didn't take too long to like, okay, that doesn't make much sense to me. And then the more I read, I realized that hey, they were basically infamous for pure pump and dumps, and I think they got paid typically in stock and options, etc. So I guess that's one form of sponsorship or something like that. Uh, Personally, I don't. I have passive banner sponsors, but I've decided not to. I don't want to have any stock options or anything like that because I think it would be too hard in that case to be unbiased because I'm biased as it is. I of course I'm gonna be biased when it comes to my holdings, and if a holding is also a sponsor company as well, I'm only human, and of course I want to believe that what I own, etc., is gonna be a good story or is a good story, and should have a pretty good chance of working out. Obviously, big success is the exception, not the norm in this business. Anyway, I understand it's very hard. That's why I keep iterating the fact that I think the Crescat Capital presentations and Quinton Henry's presentations, are probably the best thing that has happened to me personally, uh, and I think it's perhaps one of the best assets any newbie can have. Basically, there are not too many. I don't know a single one actually that really takes a fund or fund manager or whatever that takes the time to break stuff down and explain things and actually have the balls to make a judgment call, because otherwise if there's like too many forward looking statements, I want to, it's easier when you talk to management teams in private or whatever, to like really try to gauge basically what they're seeing, what they believe. It's like I want to hear their subjective thoughts on what the potential is, and then I just go and do some due diligence and think, does this make sense? Sometimes you can kind of sense that they're being over promotional, etc., and it doesn't really add up. But at the same time, many are. It's like there's quite a few really good people in a lot of juniors, and especially the ones that have a track record of previous successes or have been working at large mining companies. I mean, they tend to be quite stand-up people, which I think explains a lot of their success. So there's people is obviously probably the most important thing, because I like to think that, okay, if you're a serial successful person, if you're already rich or whatever, I mean, you probably care about your reputation. You probably are not driven by money. You're probably, I mean, not only money, but of course, being driven to succeed and have a big payday is a good thing. But it's like they care about the reputation. They don't get out of bed in the morning unless they think they are working at something meaningful, because there's no shortage of people who are actually basically running lifestyle companies and just want to fleece investors. That's what they get up to do. They're not driven by success because they have no real integrity or have had any success or have any hopes of having success. So people is the number one thing, and of course it's like, if I have huge respect for Quinton and Kevin and Tavi of Crescat Capital. So if I thought they were blowing smoke up my ass, um, obviously I wouldn't put so much weight on their uh, opinions. But I think they're some of the best people in the sector, and I think Quinton Henne is one of the uh, one of the best geologists around. And I mean, you can ask people about that. It's not just me saying that. I mean, he is a pretty famous, and I know Brent Cook has said that he's one of the smartest geologists he knows. And I mean, he did work for Newcrest and Newmont, etc. So it's like, this is not a random geologist. I mean, he's I mean, just incredibly smart. I would say probably a polymath actually. So it's like, how can I beat that kind of due diligence? That's why I made a video not too long ago about Crescat Capital spreadsheet, where they basically outlined. I don't remember if they actually included that in this. Yeah, here. In the last presentation, where he basically, I'm assuming it's Quinton who has put this together. They name some of their top holdings, and you can see their exposure, percent exposure, net asset value. So basically, how much skin in the game does the fund actually have? It's like, you can see Snowline, obviously big holding. SK is a huge holding. And then you have some 4.19%, Elura 18.5. So there's obviously, a few stories that make up a lot of the actual meat in the Crescat Capital Fund. But when you consider it also, it's like, these guys are, I mean, if they're putting money into it, they have a huge position. So it's like, I mean, they can't really dump anything. So it's not like they can pump and dump if they own millions of shares. That's going to be quite hard without a liquidity event. And furthermore, I mean, when you listen to it, I mean, everything makes sense. I mean, SK, which has become, I think, their largest holding. I mean, if you look at the news releases out of SK Mining, I mean, that story just keeps on getting better and better and better. So is that, I mean, yes, it's become a big position, and I'm assuming, I mean, if that would go up like 200% from here and nothing else moved, I mean, I would assume they might need to sell some actually, but it's like, it fits. So that's, I mean, they are well on the way on the Lassonde curve. They made a discovery. Now they're in this phase. I mean, they've said this before. This is where they're focusing their, where they have their focus. Because, okay, what do we know about the demand supply picture today? We're not finding enough discoveries, or making enough discoveries to plug this demand supply gap, because we mine a Carlin trend each year, and we're not finding a Carlin trend and putting it into production each year. So for every passing year that goes on, the need for new supply just increases, and therefore the value of any new supply keeps on increasing, which should lead to, some kind of, squeeze, because demand overshadows supply. So one thing is like, yes, it would be good to have a mine operating today, but I think the price of gold, especially in real terms, is going to go up in the coming years, and over a long time actually. So in one way, it's like one would not want to peak in fundamental value today because the fundamental value of gold keeps increasing. So let's say the price of gold peaks in 5 years. I mean, ideally you would have a portfolio of companies that are growing their gold reserves or resources every single year and peaks at year 5, because they will have maxed out the company value and the commodity value at the same time. So that's how I like to think about it. And of course, like I've shown before, I used to be in pre-discovery plays because that's how everybody told me that's how you get 10 baggers. Every time I read about a grassroots exploration story, it's like this could be a 10 bagger. All the time it was pre-discovery. Every time it's like if they hit, this could be a 10 bagger. First of all, almost no grassroots exploration play I actually went into made a discovery. It's like it's remarkably few companies that actually make a discovery. And when you are in a company and the hype is real, I mean, it always feels like, yeah, there's probably a 50% chance that this works out because everybody says this is going to work out. But in reality, I think one should assume that at least 95% chance of failure for any maiden drill campaign of actually making a discovery. Because sure, you can hit a system and there's gold there, but the odds of you making a discovery hole, I mean, you can drill and maybe you get 5 meters of 1 gram per ton. That's not going to move the market. That's going to sell off hard typically, especially if the hype was high going in. But the next hole over, or 10 meters to the east or whatever, there might be the actual ore zone where you get 10 meters of 10 grams per ton. So it's even if there is a deposit at a target, it takes a lot of work, and you need to get very lucky to actually hit the ore zone, because there's no shortage of systems where there's like, yeah, there's some gold, etc., but there might not even be a real ore zone, good enough grades or good enough widths, etc. So I prefer today, I mean, that's basically everything is boiled down to me nowadays. I mean, I want to have the simplest strategy possible. So when I think about it, it's like, can I predict where gold is going to trade tomorrow or next week or next month or even next year? Nope. It's like I really have no idea. I'm assuming up, especially in a year from now. So the longer I look ahead, I think gold price has a higher chance of being up from where we are. Okay, so that's why I'm in gold and silver and a lot of other metals, because demand, supply, and in the case of gold, silver, it's because the world is turning to crap basically, and we have a big debt bubble. So the macro case for gold and silver especially has been clear for years. That's why I've been all in since 2015. And the supply demand curve for almost every other metal looks incredibly favorable as well. So I like everything that's almost everything that's taken out of the ground, because we're not putting enough into production to keep society growing as we have, especially not if we're going to have the green revolution. So to me, it's crystal clear that real assets, mining, oil as well, I guess, and natural gas, I mean, that's the best risk reward around from a macro standpoint. You have the demand supply, because that's the one thing you can't print. And I mean, think about it, it's like, what happens if all the crypto goes to zero? Nothing really. Okay, except big losses and yada yada. What happens if every mine would shut down, or we didn't find any more deposits? I mean, the world would literally end. So why on earth would I want to buy artificial scarcity when there's such a blatant case of a increasingly favorable demand supply picture for the stuff that we literally need? Otherwise, everything gets halted, including, I mean, you won't be mining any crypto if you can't have any energy or build any computers and yada yada yada. So it's like, to me, that's a no-brainer. I don't even have an idea how one can be both aware of the mining sector, how cheap it is, how good the fundamentals are for the commodities, and know about crypto and choosing to put money in crypto over uh, metals, etc. That makes absolutely no sense from a risk reward perspective, in my opinion. So it's like I just can't compute when I see that stuff. It's like, to me, that's like, I don't know, 100 times better case for real assets. Anyway, so this is what I'm focusing on, because okay, what are the things I can guess? Let's say if you're a pre-discovery play, you don't even know, there's no probable growth because there's a 95% chance that they will not make a discovery. So there's a 95% chance that they don't have any probable growth. So I can't just hodl a stock, come back in 2 years and just assume that yes, they will probably have grown the ounces on the books by 200%. So I have no edge from a timing perspective. I do not get paid to wait because the story might be over as soon as the maiden drill campaign is over, unless they have good access to capital and more targets, etc. Okay, yeah, I started out doing that. Okay, forget about that. That's honestly a loser's game. And like I've shown before, the 10 to 20 bagger does not come from the discovery hole. It comes after the discovery hole. And this is a short I did for a post over a year ago. It's kind of funny. I spoke to a fund manager in the resource space who said he uses this slide, which I take as a compliment. I mean, you can look at it. I mean, SK Mining was actually kind of an, I guess, so far an exception almost. I mean, I went into that before they made the actual discovery. I just thought, which I wrote a case about, that they have so many targets. So even though this is kind of pre-discovery, we already know they have hits at Siblulu and there's some historic hits here and there, but they have so many targets. So I thought they're gonna find something because they have so many targets, and they ended up, making discovery holes, really good discovery holes on the first target, which is TV Jeff. So that's, I guess, an anomaly. But Newfound Gold, you could have bought that as soon as it got publicly listed after their huge discovery hole of like 19 meters and 19 grams per ton. And that 8-bagged from even after everyone had seen the news, everybody had digested the news, it got listed, still it went on a, I don't know, 600% tear or something, and now it's retraced because we're in sentiment decline. But it's like, yes, you could have bought that, because if they hit that, a hole like that, it's like, that doesn't fall out from the sky. So you probably can assume they're gonna hit something more, which they did. And now they have, I don't know how many targets they've actually delineated. And the Laura resources, I was actually in that pre-discovery as well, but the stories just gotten better. Once they made that fat discovery hole into the Santa Barbara, it's like, yep. I mean, I own more shares now than I did before the discovery. So whereas a lot of people, like, they gamble, and I did this myself. It's like you gamble on a pre-discovery play. Let's say they actually have success. The stock goes up like, I don't know, 50%, and you sell out, and yeah, okay. Now I take my gains and run, because this is one of the few stores that worked out. It's like, how does that make sense? If you have, like, I don't know, bet on 6 pre-discovery plays, one works out, the 5 others drop 50%, and you sell the one that's up 50%. I mean, obviously that math doesn't add up from a profit loss perspective. So it's like, I've thrown that away. I typically don't like mature mining plays either. It's like, look at Newmont. This is the projected production profile up to 2026. 7.5 to 8.3 million gold equivalent ounces per year through 2026. Where's the upside surprises here, really? How can I just wait and have Newmont probably growing 200% in value? That's not going to happen. They're not going to put 60 million ounce per year into production anytime soon, in addition to the 8 they're already doing. No, and you still have, this is just a big beta play, basically. Sure, they can, get better and worse margins or whatever, but it's just tied to gold. So I get nothing for it except like dividends. And right now, okay, they have a lot of resources more, but it's like, let's say they have a 15-year mine life on their reserves. They're mining 8 million ounces a year. That should never really, unless you account for exploration success, should never you really trade over a PE of 15. Because the business would end in 15 years. So if it's trading at a PE 15, you'd get your money back in 15 years. That makes no sense. In a finite business like the mining sector, it's like, in my opinion, you only want to focus on growth. Growth is the only thing you want to focus on. The miners, they deplete typically. Yes, they also do discoveries, etc. But like lately, what are they doing? They're making mergers and acquisitions. They're buying stuff. It's like just to be able to grow and typically just to stand still, actually. So that makes no sense. Like, you take all the risks of mining, which is a crappy business to begin with, and you get no real, upside surprise for it, because most of the miners shit the bed anyway. Or they have a mine that gets nationalized or whatever. So it's like you were hoping that a mine would give your money back in 10 years, and year 5 it gets taken away. So it's like you have no hope of getting that value back. And why did okay, I don't know what the hell happened. I had made a lot of points here. Okay, at least this is back. Okay, so take SK Mining for example. It's like, do we have probable growth here? Yes, I think so. They have like a 5 to 6 kilometer trend. They have soil samples. They have, John the Decker, which is an absolute stud, who used to find caves on Mars, and instead he's focusing on finding VMS on Earth. And I don't have the presentation up, but they have more targets than I can count, basically. And you have Scarlet Ridge, which is looks to be as big as TV Jeff. So it's like, when you think about the pipeline of targets SK has, who knows how long this one could grow? TV Jeff is probably gonna grow for at least a year or two. If they hit the Scarlet Ridge, you can add another TV Jeff system, which could grow for a few years. And then they have, Cumberland, Spearhead, C10, Vermilion, Siblulu, etc., etc. So it's like, what's the lowest risk bet here? I can't know where gold is going to trade. I can't know what any investor feels about the stock tomorrow or next week or next month. But I don't think it's a risky bet to say that I think SK Mining is going to find more ounces every year, all else equal. So even though I don't know what investors, just look at here, for example, you've had a steady, growth trend and fundamental value increasing, but as we know, we've gone into a sentiment low. So we have, what the hell? Okay, wrong ticker. So we've gone into a sentiment low. It withstood the first half of this sentiment decline, and instead of going down with everything else, this is a high quality story that has grown. They're finding, making more or delineating more prospective targets and hitting and yada yada yada. So whereas Bear Creek and most other stuff that's not high quality, does not have probable growth, that has not grown the intrinsic value of the company, whereas they are down like, I don't know, 50-60% from over this period of time. SK Mining has basically traded somewhat sideways. So that's outperformance. It sure as hell has not kept up with the value trend, but I mean that's what you get in a sentiment low. And that's what my portfolio typically does, and that's what I'm okay with. I can ride these, pretty heavy corrections as long as they keep on growing. Because even though I cannot know what the sentiment will be in a year or two, what I do know is that Mr. Market, because I mean investing is kind of like front running emotions. So I'm partly front running the fact that Bear Creek Mining will. Well, this wasn't it. The sentiment oscillator I've shown. I'm front running the delta that we're at extreme low now. We'll get into an extreme high someday. So I'm front running that move. I'm front running that whole move. That the momentum sellers today, I'm waiting for them to turn into momentum buyers sometime within next 2 years. Okay, that's front running the actions of other people. And even though I don't know what the sentiment will be in 1-2 years for SK Mining, if I just assume, because it looks probable that SK Mining will indeed keep increasing the value. So even though an ounce in 2 years, let's say, might be valued at anywhere between $100 to $20 per ounce. If a company probably has 200% more ounces, I could just assume that the market will feel better about the stock if it has grown 200%. So even though it might, depending on the future sentiment, let's say SK has, I don't know, 5-6 million ounces on the books in 2 years, or inferred. If we're in a high sentiment environment, the stock might be, I don't know, up here. If we're in a low sentiment environment like right now, maybe it will be here or whatever. But either way, I expect it to be higher than now. That's the only thing. It's like the simplest strategy imaginable. Buy post-discovery plays where I think there is probable and meaningful growth ahead and where success is meaningful. I mean, this is the SK Creek district, for Christ's sake. And you have Skeena Resources on the left, you have Newcrest with Pretium on the right. So yes, I think success here would be meaningful, and they have big enough targets that could lead to a significant discovery, or this significant deposit or deposits. So if I'm right, that means that in the coming 2 years, SK Mining will have a higher intrinsic value than it has now. And even if sentiment is kind of crap in 2 years, I still think it will have a lot higher value than today. And I think it will be, people will be have more positive feelings about it. I mean, I think, for example, right now in a crappy environment, if SK Mining right now had 5 million ounces already on the books, I think SK Mining would be trading higher than where it is, with added blue sky. Okay, probable growth. Enough said. My simple bet is I think SK Mining will be worth a lot more over the next 2 years. That's it. As long as that is intact, I don't even need to be precise about market timing or sentiment timing, because if sentiment is shit, I'm probably going to be up. If sentiment is really good, I'm going to be up a lot. Okay, good. And since they have such a long, growth pipeline, I mean, who knows where it might be one day. So even if sentiment is disastrous in 2 years or 3 years, and they have 8 or 10 million ounces on the books, high grade, or they hit some kind of SK Creek type deposit, I mean, that was worth several billions. That's not going to be trading at 270 million, even though sentiment is going to be shit. It's like Eloro, another one, obvious, like you don't get much more probable growth than this. Blue skies are absolutely huge. I mean, again, it's like what's gonna happen? They're putting together a resource. We know that Bolivia gets a bad rep, and we know that this was bashed for being an arsenic deposit, which was totally unfounded, and which we've seen is not the case. So, like SK, whereas everything else basically went down like this over the last 2 years, Eloro has traded sideways, pretty much. And this is a big consolidation because Eloro has just kept on growing. So, like I showed in a previous video, if you have a let's say a company that has not had much success or has done nothing, basically it's a trading sardine, value has perhaps gone down, well, let's say like this. But due to sentiment, the stock has gone like this. So you have this kind of sentiment discount. It's they've been absolutely slaughtered for not that good of a reason. I mean, you see stuff down 70-75%. That's like, Jesus Christ! I mean, they're not trading far away from cash, and their cases, the thesis they have, haven't even been disproven. So it's like total emotional discount. So maybe this would be a sentiment discount in the average, stock, even the pretty, let's say, okay ones. Okay, sure. What happened to Eloro? Eloro has actually increased its value incredibly by an incredible amount because they hit in every hole pretty much. The metallurgy looks, pretty great actually. Okay, so they also have a sentiment discount, but since value has grown such to an ever increasing amount, as sentiment got worse and worse, Eloro traded sideways, but value went up. So this has still had an expanding sentiment discount because value is up here and price is down here actually. And in the case of companies that have not done too well fundamentally, or actually have done little to nothing over this period, and let's say they diluted a bit, so value is actually down here because price of silver and gold is down a bit. But this is the kind of sentiment discount you're seeing, how that affects price. So let's say pretty much the same discount. It's just that Eloro has grown. So the discount has increased, the worse sentiment got, but since value grew as well, you have a neutral price action. And here you have a similar type of discount, but price didn't go up so much, so actually price is now way down, or value didn't go up as much. So that's why, I mean, typically I know, and I get that feeling as well. It's like maybe Eloro has held up so well, so maybe I should pick up some of these dirt cheap companies instead and rotate out of Eloro. I can understand that. Some micro cappers just get absolutely clubbed, and I mean the ones that are not too bad. But I would I wouldn't say caution, but it's like I would note the fact that yes, at surface face value, Eloro has been neutral, trading sideways, and some Junior X is down 60%. That doesn't mean that Junior X is cheaper than Eloro, because Eloro has increased so much in value that I think this is a major box consolidation by the looks of it. And I think the value of Eloro is a lot higher because this looks like an absolutely world-class behemoth deposit. And yes, it's in Bolivia. Still, it's not reflecting this at all from an economic standpoint, in my opinion. So I would say that I think Eloro is incredibly cheap right now, even if you account for the Bolivia discount. And they're still growing. I mean, they've scratched the surface, but if this turns out to be, I mean, that's even bigger than this. And this is already huge, maybe, 1 to 2 billion tons, I don't know. It's like they have so much left in terms of growth that it's silly. And they've already grown such an amount. So it's like, am I selling Eloro? No. It's one of my largest positions still. And it's like, yeah, that's actually held up the portfolio quite well because like SK Mining, they traded sideways. And I mean, they're some of the most de-risked as well. I mean, this has for sure probable growth, and for sure it's already cheap. But there's a lot of juniors that are cheap, but they don't have the probable growth aspect. And I prefer probable growth. And in the case of Eloro, you actually get margin of safety as well. Goliath, I mean, also one of Crescat's top holdings. Why wouldn't it be? 60, 70 million Canadian. They've been hitting in every hole so far. I mean, when I think about probable growth, I think of Goliath because they have a 100% hit rate so far and they have huge step out holes. And sure, it's not the same. It doesn't appear to be the exact same system, this Pad J New Gold. This is the Sure Bet Zone, but the Sure Bet Zone alone, I think, could be a company maker. And when you think about, okay, British Columbia underground appears to be very good metallurgy, etc. If you have, I don't know, 4, 5, 6 million ounces of this high grade stuff with good widths, etc., in BC, which is a tier 1 jurisdiction, which I think will continue to be a pretty good jurisdiction because we've seen majors at least voting with their feet getting in, Pretium, Evolution, Newmont, Newcrest I meant instead of Pretium. So if this is one of those tier 1 jurisdictions that might get into a bubble because you can actually get a mine up and running here, especially if it's, let's say underground, which makes it easier for ESG reasons because there's less footprint, etc. Who knows what this would be worth in a, I mean, from an economic standpoint, maybe this will be worth over $1 billion. And if we go into a hot market and they find even more success, who knows? Maybe 2 billion, 3 billion. I don't know. It's trading at 70 million right now, and I can almost. I'm gonna say it's not a sure thing, but given the hit rate, this probably very probably gonna grow. And and otherwise it's like, I mean, again, if you have a hard time picking juniors, it's like Crescat's portfolio has done great. I mean, if I wasn't, I like to hunt, I like to stock pick, I like to manage my own money. If I didn't do that, I'd probably just buy into Crescat Capital's fund because, I mean, I almost share their, I pretty much own their top stories as my top stories as well. And if you invest in Crescat, I'm not sponsored by Crescat. I don't get anything for if anyone invests with them. But you get, since they are into private placements a lot, you get the added benefit of actually getting warrants. And just some points here. Okay, why do I appreciate Crescat and why, am I quote a fanboy of Quinton Crescat and why do I own a lot of the same names? Because everything that comes with it. Superior due diligence. I mean, who am I to one up Quinton when it comes to geological potential? I don't come even close. So it's like if he puts a blue sky number or an estimation of what the blue sky number might be, I'd take that over my estimation 1 million times and twice on Sunday. Backing and support. Okay, what are people afraid of? It's like the junior running out of cash, maybe they can't do much in terms of value creation. Well, they pretty much almost help all their holdings. I mean, they up their stakes typically unless they already hit the cap, especially the ones that are doing well. So it's like you get the added benefit of good access to capital because in times like this, access to capital and being short on cash is not the greatest thing. So you get backing and support. You have governance and guidance help. Meaning, I mean, when you hear Quinton talk about some stores, he wants to swing for the fences. So he tends to push management to try to create as much value as fast as possible. Meaning, big step out holes. Test those deep targets. Let's see what we got here. Basically, trying to turn them into an overnight success. Because I think it was him that, that pushed Goliath to do this drill hole last season. That was a 1 kilometer step out hole. So since that hit, it's like, yeah, that tells us a lot. Okay, and after that they participated in a new private placement. Why? Because they got proof of concept that the system appears to extend for 1 kilometer at least. So in terms of ROI or paid to wait, you want the people that are, I would think you want the ones that try to create as much value as quickly as possible, and that's where Quinton comes in because he's after the same thing. And he's not looking, I mean, if you have Crescat as a big shareholder, they're not looking to stuff people. So that's also good. Updates, I mean, the Crescat presentations, I think they're gold. he can break down what the meaning is for news releases, etc. much better than I can. Uh, Blue sky estimations, which this spreadsheet here. I mean, you can just pick and choose. I was gonna say it's like, okay, yeah, okay, appreciation potential. Yeah, okay, I'll take some of that. I'll take some of that. I'll take some of that. I mean, that's still better than an estimation I would come up with. It's like in some cases, even if he's off by 50%, that's still good. And if you spread bet across these, I mean, maybe I don't know, 4 in 10 or 4 in 20 need to actually deliver. If you have 5% in each and you hold them until, okay, they don't have the peak Lassonde year. They had that in the last, basically when they think the growth pace will have peaked. But let's say on average, you hold them for 2 to 3 years. You come back, let's say 4 out of 20 actually, 3 or 4 out of 20 actually reaches somewhere along blue sky. Okay, that's probably gonna multi-bag your portfolio in that case. Nice. Okay. Yeah, hand holding. Again, it's like he breaks down stuff and explains what is good, what is bad, yada yada. So it's like I feel like I feel incredibly lucky, let's say, to find this sector at a time like this when you have a guy like Quinton Henney who teams up with Crescat Capital and shares their and he shares his due diligence. I mean, I couldn't ask for a better setup. It's like, again, if I didn't like stock picking, etc., and managing my own money, I would just buy this fund and just sit back. Because I think they're gonna have some huge successes, and I think the Crescat fund will be the best performing precious metals focused fund in the world. That's just my opinion, of course. I can't guarantee that, but they have done very good so far. So that's basically it. I mean, that's where they are focused as well. They know the world needs a lot more supply, and they're focused on the ones that can prove up supply quick as possible. And typically, they also choose areas where you actually can probably build a mine. So you have that due diligence taken care of as well. So there's a bunch of benefits, and it's like I think people perhaps underestimate just how much value you get from watching these Crescat presentations. And I mean, sometimes it takes a while. I mean, if Quinton explains a case and it's like he's very excited, it might take 1-2 weeks before I really thought it through to really understand what he's seeing, and then I get the conviction, and then I buy in big, let's say, because I don't just buy any case or stock. I don't own all Crescat plays. I own the ones that makes the most sense to me as an investor, because I mean, you can play or not play thousands of juniors. That's the luxury we have. You can decide not to play in any juniors, or you can pick and choose as much as you want. And the less money you have, the easier it is, because you're not constrained by there's some juniors, for example, that right now have such low liquidity that I can't really get out of the position even if I wanted to. So it's easier the less money you have, actually, to just shift and change. So to sum up, my case is to buy the ones that have probable, significant, meaningful growth over the next 1, 2, 3 years. Buy them, mostly hodl them unless they become too big of a position or whatever, or one gets cheaper than the other and I might reshuffle. And sometime in the future, almost regardless of what the price of gold is or what the sentiment is, if the cases works out on average, they will be worth a lot more in 1 year from now, 2 years from now, 3 years from now. And regardless of where sentiment is, I expect my holdings to be worth more. Because the market Mr. Market, even though depressed, will probably look more favorably on 5 million ounces than 2 million ounces, etc. Uh, this turned into a longer rant than I expected, but comment if you have some other questions or if I didn't explain some stuff well enough or anything like that. Assume I'm biased. I think I own shares of all companies mentioned, not Newmont. Assume I'm sponsored by all companies. Consider me biased. Do your own due diligence. I don't share your profits or your losses. Don't invest money you cannot afford to lose or will need in a short time frame. Thanks for listening. Hit the like if you like this stuff. Bye.